Senator Mark Warner, one of the most conservative Democrats in the Senate, went on the podcast Pod Save America recently, and he responded to Senator Elizabeth Warren's objection to his bipartisan coalition with other conservative Democrats and Republicans, including Senate Banking Chairman Mike Crapo, or Crapo as I like to call him idiotically, working to deregulate large banks under the guise of community bank relief. I've reported on this bill in the past, but here's a refresher. By a vote of 67 to 31, the Senate passed the Economic Growth Regulatory Relief and Consumer Protection Act, which is aimed at reducing the regulatory burden on struggling community banks, even though most such banks are thriving. The measure would also exempt 25 of America's biggest banks from regulations created in response to the financial crisis that contributed to the Great Recession a decade ago. The Congressional Budget Office warned that the risk of another financial crisis would be slightly greater under the legislation. Part of the legislation could allow JP Morgan Chase and Citibank, two of the very biggest banks in the United States, to hold less capital relative to their assets, undercutting one of the 2010 Dodd-Frank law's safety measures. Under current law, banks with assets of $50 billion or more are considered systematically important financial institutions, often referred to as SIFIs, and are therefore subject to stricter oversight from the Federal Reserve. The Senate bill would increase the SIFI threshold to $250 billion. Banks with assets of less than $100 billion would be freed of current oversight requirements, and those between $100 billion and $250 billion would no longer be subject to tougher rules after 18 months, although the Fed could determine periodic stress tests and other tailored oversight measures. Keyword could. That would free up a lot of regional banks from the heightened regulatory scrutiny they face today, including BB&T, SunTrust Banks, KeyBank, and American Express. So this is the bill that Mark Warner and 17 other Democrats voted for. Apparently, American Express and Barclays, some of the banks whose restrictions would be loosened, are small community banks. Elizabeth Warren was obviously against that bill. It's her bread and butter. And Mark Warner got a little testy on this podcast about that fact.
We had your colleague Elizabeth Warren on the show last week. And she's not happy about the banking bill that has passed the Senate. I don't know if you've heard that. So the bill would relax some of the restrictions on both community banks and larger regional banks.
Well, guys, all right, let me take. I resent anyone who says, since I was actually here during Dodd-Frank, I was on the committee. Title I and Title II were pretty much the result of my work and a number of others, and I would do nothing to undermine the basic principles around Dodd-Frank, about the biggest banks, about the consumer agency, about derivatives. You don't have to believe me. You got to just go believe what Chris Dodd and Barney Frank have said. I also know as well, Congress never gets it 100% right. So in a normal place, you always come back with a fix-it bill. I've lost a third of my community banks since Dodd-Frank, and this bill did focus mostly on community banks and credit unions. There was a jump ball. Even the most ardent supporters of Dodd-Frank said the $50 billion limit in terms of where what's called enhanced regulations goes forward, that needed to be raised. Should have been raised to 100, 150, 200, 250. We basically, the Republicans wanted a lot more. As a matter of fact, my biggest bank in my state's mad under the Dickens because they got no relief at all. But what we said for banks between 100 and 250, the Fed's got to go back in, re-examine all those banks, and if they're plain vanilla, don't do anything exotic, maybe they can get less regulations. And, there was an argument what the number should have been, but it really bothers me when people are out there impugning people's motives when we're trying to actually get something done. And quite honestly, in a time when we got a Republican president, a Republican House, and a Republican Senate trying to stop the efforts to completely roll back the protections around the Consumer Bureau and completely unleash the big banks. So as long as you want to have a straight factual-based argument on this, I'm fine, let's have it. But some of the over-the-top accusations been made just haven't been made based in fact. And frankly, you've got an awful lot of Democrats who are up for re-election this year. I'm not up for re-election, were disturbed by the tenor of the debate.
So this is a retread of an old argument that Hillary Clinton used in the primaries against Bernie Sanders. Stop impugning my good name, me, as a good gentleman from Virginia, in Mark Warner's case. How dare you point out that my policies are for the big banks and that I receive donations from those big banks. I listened to Senator Warren on the podcast. I didn't even hear anything remotely as strong as that kind of language about donors, etc. In fact, I actually heard her respond to a statement from Senator Heidi Heitkamp, who criticized Elizabeth Warren's stance on this bill, which she, of course, voted for. Heidi Heitkamp's very conservative. Here's what Elizabeth Warren said.
So you've drawn some criticism from Democrats for how hard you've advocated against the policies in this bill. Senator Heidi Heitkamp of North Dakota, she gave an interview yesterday where she said you're misleading people and exaggerating what the bill does. For example, she points out that banks with assets below $250 billion would still be subject to stress tests if regulators said they pose a threat to the financial system, and on disclosures related to race from mortgage lenders, the exemption would only be for very small lenders making fewer than 500 loans a year, which would affect fewer than 4% of the mortgages that go into this data collection. So Democrats are saying that, we can have a disagreement on policy, but that you're overstating how much deregulation this is, that yes, there are places to disagree on policy, but this really is aimed at community banks. And to say that this is a bank bailout or a lobbyist gift is unfair to your colleagues.
Let me hit this one at two different levels. The first is, come on, you guys know me. I am a former professor. I footnote everything I do. So when we're talking about the reduced capital standards for the giants, don't listen to what I have to say. Turn to the Congressional Budget Office that has said this bill will increase the likelihood of a taxpayer bailout. Look at the FDIC that talks about what it means when banks are going to be able to reduce their capital standards. Shoot, this is a bill. Can you believe this? The Wall Street Journal and Bloomberg actually both editorialized about it because they said it puts more risk into the system. So, I agree. The facts are the facts, and we should talk about the facts. But that's what I've been doing from the very beginning. And there are a lot of folks who don't want to hear that.
I'm no economist, but the politics of this vote are abysmal. I mean, apparently Democrats want to run for office saying, our one bipartisan accomplishment is helping out the big banks. Vote for us. That is baffling to me. It is also baffling to me that the Democrats who voted for this bill didn't hold out their votes until we extracted some sort of concessions, like a real head of the Consumer Financial Protection Bureau, for example. Do you have a sense of why more of a fight wasn't put up by those who ultimately decided to support this bill?
I'll just be blunt. You'd have to ask them. And I just can't do better than that.
So why is Senator Heitkamp not hurting the party, Mark Warner? She's criticizing Elizabeth Warren, one of the more popular Democrats in the country, saying that she is overstating the deregulation that these 17 Democrats voted for. A majority of Democrats are against this bill, voted against this bill. Why is Senator Heitkamp not harming the Democratic Party and the Democrats' congressional candidates in 2018? Why is it only when Democrats speak out against bank deregulation or for bank regulation that they're harming the party? Why is it never, ever the talking point that your corporatist gaggle, a minority of the party, in this case, voting for bank deregulation is hurting the party because the overall party is, ostensibly against it. And you keep saying how you wanted to fix Dodd-Frank by deregulating more? Is that what your constituents tell you in Virginia? That the financial reform after the crash wasn't enough? I don't think so. Because not only is Virginia a solidly blue state, but that is a position that is widely accepted amongst most Americans, that Wall Street is still not regulated heavily enough. Voters overwhelmingly favor regulation of Wall Street and strongly support the work of the Consumer Financial Protection Bureau, the CFPB, according to a poll released by Americans for Financial Reform, the AFR, and the Center for Responsible Lending, CRL. 78% of likely voters say that tough rules and enforcement are needed to prevent the kinds of practices that led to the financial crisis, with 85% of Democrats, 81% of independents, and 67% of Republicans holding this view. Majorities in all parties favor more rather than less regulation of finance. Okay, the AFR is a progressive nonprofit, so you may not even buy that, but even conservative estimates show that Americans want more Wall Street regulation. A 2017 Quinnipiac poll showed that 50% of respondents said they support increased regulation of financial institutions, while 37% said such regulations damage the economy. That's a 13-point margin by conservative standards, and Warner is in a blue state, but his fix to the Dodd-Frank bill is less regulation under the guise of community bank relief. And when Warner refers to the community banks he wants to help, is it really for his constituents' benefit? Because a few months ago, he introduced a bill to further deregulate payday lenders, skirting CFPB federal regulations, one of the most predatory and disgusting banking industries in the country. They just prey on the poor and desperate, people who need money right away, cash now. And how about the argument that he is just trying to get something done in gridlocked Washington? But what if that something is harmful, Senator Warner? Why do you care about getting something done if it's a horrible piece of legislation? We all know what the answer is, because it's not horrible for your donors. So let's have a refresher on who Senator Warner's donors are. His second highest career industry donor is the securities and investment industry, donating over $3.4 million to him in his career. You've got real estate at number 4 with $1.86 million, insurance at number 5 with $997,000, then lobbyists, then business services at $908,000, and miscellaneous financial industries at $821,000. So it makes sense why he's for this bill and why he's been for nearly every bank deregulatory bill that he can get away with. His donors need that payback. Oh, I'm sorry, Mark Warner. Have I impugned your character?